Advisory services offered through VestGen Advisors, LLC, an SEC-registered investment advisor. Securities offered through Private Client Services, LLC, member FINRA and SIPC. Private Client Services and VestGen Advisors, LLC are unaffiliated entities. Any information discussed does not constitute investment advice. VestGen Advisors and Private Client Services do not offer tax or legal advice. People of Chicago, welcome to In the Know Radio with Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners. You want help from someone you can trust, someone who knows what it takes to get retired and stay retired. Today, Craig's going to teach you what you need to know. So get ready to learn something that could change your life. Get connected to the show by calling 833-964-PLAN or go to getretiredstayretired.com. And now, here's Craig Bolanos.
Hey, good morning. We're here on a Sunday because we want to help you get retired and stay retired because you too deserve to thrive in retirement, not just survive. Bottom line is, it's messy out there, and we want to clean up the mess and give you the sincere and actionable ideas that you need to improve the life of yourself and your loved ones financially. Oh, I talk about this survey. It comes out once a year because it's an annual survey of people between the ages of 61 and 65. It's called the Protected Income Retirement Planning Survey, and it always reveals some similarities. But this one, oh no, it revealed a full triple threat, or maybe I should call it a triple whammy of financial worries that are likely causing people to postpone retirement. And it saddens me when people might have to feel that they're going to postpone retirement because the single most important currency anybody has is the currency of time. And what are those triple whammies that were cited in the survey for those 61 to 65 that's causing them to have to work longer? Number one, inflation. No surprise there. Number two, healthcare costs. Can't say I'm shocked. And number three, a fear, though, interesting, a fear that made it into the top three, which was people concerned about Social Security benefits being reduced based on policy action. Oh my gosh, what to do? Let's cure all three. I couldn't think of anyone better to have the conversation with than one of our top wealth advisors, David. David, you know I love this survey. It comes out every year, and it just gives us some insight into the human condition, what I call the sentiment, how people are feeling. David, talk about how we're curing the first of those triple whammy worries, inflation, on behalf of the clients at VestGen.
Well, you know, in my opinion, when I hear some of these surveys, I'm always kind of surprised what the results are. But I'll be honest, I think they hit the nail on the head on these top three things, inflation being number one. This is a conversation that I probably have 2 to 4 times a day with families that are quickly approaching retirement or already retired. And everybody gets it. We've all been in the same boat since 2020. Inflation's been through the roof. And there's a lot of frustration for Main Street America when they hear on TV that the inflation numbers are, 2, 3, 4%. And they know in real life that the inflation numbers on food, utility bills, healthcare are growing at a much more rapid pace. So how do we cure that? To me, it comes down to having a tangible retirement plan. But this is why we always harp on the fact that yes, I think a part of your money should be locked up in safe investments. And there's a reason to buy CDs and get, 4 or 5% yields. But the reality is we still have to grow the money even when you're retired. So some portion of that portfolio is going to have that inflation hedging component. And that can come in several forms. It could come in rising dividend income. It could come in form of stock appreciation, or in most cases, it's a combination of different levers and lots of different portfolios for families that we're working with. But I wasn't surprised to see inflation as the number one thing up there because I'm a long ways away from retirement myself, Craig, and it's something that I think about at least once or twice a week for my own personal finances as I pay for my kids' education and things of that nature.
Perfect. So, hey, 833-964-PLAN. That's 833-964-PLAN. Check us out. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. David, the survey also cited healthcare at 60% of the people said they're so worried about healthcare in retirement. How do we help people navigate this myriad of pre-Medicare, post-Medicare Advantage and supplement plans? What is it that VestGen does that so many other financial advisors are outsourcing?
We help through education. And I think that's our job on all of these topics, is helping people to understand that there are some lines in the sand that they don't want to cross from an income perspective. We want to create clarity on the real costs of healthcare in retirement. And so I think it starts when we're several years out from retirement, and we kind of block it out into phases. So phase one is maybe you're intending to retire prior to Medicare eligibility. So we're going to have to go on the ACA and get an ACA compatible plan. Our job is to create clarity on what that is going to cost, right? Not just what you see advertised on TV or on the internet, but in our experience, here's what people are actually paying. And then what we do is we designed a cash flow plan around that to help you qualify for maximum subsidies. And I understand for a lot of retirees that have done a great job saving, maybe they don't think of themselves as in a position where they should qualify for those subsidies. But I think our job at VestGen is to show you what the rules are and put you in a position to take advantage of anything possible. So we've got to show you what the rules are, what those income thresholds look like, and just put the costs on paper in plain English so you understand. Then as we transition into Medicare at 65, the good thing about Medicare is the pricing is somewhat standardized. I think that maybe it might not be a fear of what Medicare costs. It's a fear of maybe what Medicare is actually going to cover. How much are you going to have to come out of pocket? And we do that because we have folks on our team, that's all they do is Medicare, 5 days a week. They don't do investing. They don't do taxes. They just do that. So it's nice to be able to draw from a deep bench that we have at VestGen to create clarity on what those things are going to cost, how they're going to be deducted through Social Security, and what types of supplements might work well for you versus your good friends that may have moved to a different part of the country where those plans aren't as accessible based off their access to healthcare.
That's right. We're talking about this survey that's an annual survey of those 61 to 65, and it always reveals something that's unique. And what we're seeing this year in the survey is so many Americans 61 to 65 are admittedly postponing retirement because of the triple whammy of inflation, rising healthcare costs, and then that brings us to number 3. 58% of the people surveyed this year cited they're worried about their Social Security benefits being reduced. David, do you think people should be worried about their Social Security benefits being reduced? What does this conversation mean to you as a wealth advisor with the clients of VestGen? And how are you solving for the reality that is today?
Look, I understand the concern. Certainly be very unpopular politically to make those changes, but the numbers don't lie. And we have a large deficit in this country that needs to get resolved. If I had to have a strong opinion, I would say means testing seems to be a pretty popular thing in this country. Testing.
What's means testing? Yeah.
Some people pay more for the same benefits that others pay less for.
Wait, don't we already have that?
That if you're a higher income earner or you're in a higher tax bracket, you can, quote, afford to pay more for the same type of benefit. And while I don't agree with that, it's pretty popular, which is why we already do it for things like Medicare. So maybe the stage is already set that we do that for Social Security one day. Maybe instead of only taxing 85% of your gross Social Security benefit, they start taxing 100%. So we don't know the answer to that. It changes all the time, the path that we're going down. But how do we solve for it in real life? We have to run multiple scenarios of your retirement plan. And we run multiple scenarios anyway, because no one can put any of this stuff in ink, meaning there is the age at which you would like to retire, and there's the age at which your company or your employer might want you to retire. And maybe those aren't the same date. So all retirement plans have multiple versions. But I will tell you, Craig, it's more popular from some of the families we serve to now go in there and dilute their Social Security benefits just in case. So can we stress test it with a higher tax rate or taking a haircut on what that benefit looks like? And I think that's an exercise well worth it. You just have to find an advisory team that's willing to run these different scenarios and put the time in. There's no one size fits all retirement plan. That plan has to be unique for each family.
So maybe David, you too, if you're listening, maybe this survey is speaking to you because there's more than 11,200 Americans turning 65 every day in America. And this survey showed that so many of us, so many people out there are worried about the triple whammy of inflation, healthcare costs, and whether or not your Social Security is going to be there when you demand it, when you need it, and when you deserve it. So how are we going to future-proof you from changes that are already here and changes that are going to come? It's going to be driven through strategy, multiple scenario analysis, so that you can have as much preparedness and flexibility that you need so that you don't just get retired, but most importantly, you stay retired. So connect with us online. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. Call us today at 833-964-PLAN, 833-964-PLAN. When you're on the website, request a complimentary consultation with myself, David, one of the advisors at VestGen. We can do that via phone, via Zoom, or in person at one of our offices. And I encourage you right now today, download What's Trending, Tax Opportunities for Investors, courtesy of the One Big Beautiful Bill. Download our useful guide today from GetRetiredStayRetired.com, Tax Opportunities for Investors, courtesy of the One Big Beautiful Bill Act. All right, you're listening to In the Know, AM 560, The Answer.
You want more In the Know radio? You want more In the Know radio? You can't handle more In the Know radio. Okay, yeah, you can. And it's on AM 560, The Answer. Welcome back. Here's more with Craig.
We just got done talking about the triple whammy, the threat that so many investors and future retirees are discussing. Inflation, healthcare, will Social Security be there? But David and I were talking on break, and this comes down to something so eloquent, so demanding. You got to start talking about TIR. That's TIR. David, TIR means what?
Taxes in retirement.
Taxes in retirement. Yes, I'm sorry to override you, but it's taxes in retirement. And if you are not future-proofing yourself for taxes in retirement, I got news. You might end up coming up short because there's a whole litany of online calculators that people use. There's basic software packages that financial advisors use. But if those software packages aren't including everything that's transpired from the Tax Reform Act of 1986 to the Tax Relief Act of 1987 to EGTRA 2001 to the Tax Cut and Jobs Act to OBA, the One Big Beautiful Bill, you got to stress test all of your cash flows on an after-tax basis, or your retirement might just come short. So, David, talk a little bit about how you're doing that, how we're doing that in the collective of a family office that is VestGen Wealth Partners.
Just gets back down to creating some clarity on what this stuff is going to look like. So, a lot of times people will come in, they say, I've already started to do my back of the envelope math where I've written down how much we're going to get from Social Security, how much we might get from a pension, how much we might pull out of our 401ks or trust accounts. But part of our job is to create the clarity on, well, when you do stop working, here's the tax bracket you're likely going to be in. And let's use Social Security as an example. We have your gross Social Security amount that's printed on the nice little statement that you download from the internet. Well, we got to subtract your Medicare Part B premium from that. And then we have to account for the marginal taxes that are going to be applied to 85% of that benefit. And the number you start with is not the number that's actually going to hit your bank account on a monthly basis. And then we have to take those same types of formulas and apply them to all of these different accounts. I mean, there's no free lunch out there. Even when you're earning money on a CD, as many people have learned the last couple of years, it's great to collect all of that interest, but there's no withholding on what the banks are paying you. And then you have a surprise come April that you owe extra money or you made just too much interest. And now they're socking you with an extra IRMA surcharge on your Medicare. So our job is to draw those lines on paper so you know what we need to stay above, what we need to be below, and organize them in a way that you can understand. And then I think that leads to the next natural transition, which is we got to look at our monthly cash flow on an after-tax basis, but it's equally important to assess your investments on an after-tax basis as well. As I mentioned, there's a difference of making 5% interest taxed at ordinary income versus 4% completely tax-free. And there's a difference between owning a mutual fund that passes through a nasty capital gain distribution at the end of the year versus an ETF, a portfolio of individually managed stocks. And those are the things where it just takes time to educate folks on what the opportunity sets look like. But we just got a blessing from my standpoint, which is we just got another several years of the same tax brackets. So everybody's got more time to shuffle around their puzzle pieces as they prepare for retirement, because you never want to do everything in one swoop. You want to make strategic moves over time so that you're set up to be as tax efficient as possible going into retirement. So there's no massive changes that have to happen year one. And Craig, I know you spend a lot of time doing that. That's why we're always talking about things like direct indexing or figuring out if you really should own tax-free bonds versus corporates. I mean, this is the stuff that makes the big difference over time.
That's exactly right. You can't outrun income taxes. You can't out-invest income taxes. So the leverage comes from solving for tax-efficient withdrawals first. 833-964-PLAN. That's 833-964-PLAN. Go out to our website, getretiredstayretired.com. That's getretiredstayretired.com. Well, David, we're busy right now at VestGen Wealth Partners because a part of this now is not just solving through stress testing cash efficient withdrawals on an after-tax basis. It's also solving for the changes in the One Big Beautiful Bill Act. I mean, David, we expanded that SALT cap deduction all the way up to $40,000. But David, the SALT cap, not everybody's going to get it because it phases out depending on your income. So I ask our listeners, are you working with advisors that understand the SALT cap phase out? And are those advisors relooking at your income plan to make a determination as to how it can, should, change or possibly remain the same based on what's important about your unique situation? The other thing I think about, David, is everyone. We just talked about there's 11,200 Americans turning age 65 today. And David, turning 65 is one of those years you love to blow out the candles because you get into Medicare. But now, courtesy of the One Big Beautiful Bill Act, what else do you get per person at age 65?
Yeah, you might qualify for a $6,000 senior bonus deduction, $6,000 per person, or in some cases, $12,000 per couple, which is a game changer for a lot of people around that 12 or 22% marginal bracket, because they might be able to even qualify for something that sounds crazy, which is, I think some people out there, unbeknownst to them, might even qualify for something like zero capital gains tax due to these new bonuses. But to your point before, Craig, that's not everybody. There's a phase out on this new senior bonus deduction. So a lot of people, I think, are actually going to be at the beginning stage of that phase out. They might not capture that full $12,000.
So this is a game changer. We're unpacking how you need to do all of your planning through an after-tax mindset. That's after your federal taxes, after your state income taxes, and your retirement modeling needs to create multiple scenario analysis so you too can find your own tax-efficient corridor of withdrawals. We do that well. We've always done that well at VestGen Wealth Partners. 833-964-PLAN, 833-964-PLAN. Get retired, stay retired.com. David, you just mentioned the enhanced standard deduction. We talked about the increase in SALT cap and the importance of all those families who are just in the top end of that 12%, pushing into the 22% bracket. We talked a couple weeks ago about the power of zero. You hinted to it again here. This is my reminder, America. There are people who qualify for 0% capital gains rate, people who can qualify for a 0% dividend rate. I think the enhanced senior deduction combined with the new standard deduction, combined with the above the line deduction for charity, which is also a part of the One Big Beautiful Bill Act, all that means qualifying for 0% dividends, 0% capital gains just got into the reach of so many more Americans than we had prior to. So my challenge to everybody is, what are you doing to solve for it? And are your existing advisors aware of it?
And Craig, just to jump in here, I ran into one of your clients leaving the office the other day, and what they had said was, Craig does a great job explaining this stuff on the whiteboard so we understand. And I think that's important because some of the technology in the financial planning business today is phenomenal, and it keeps getting better with AI, and it creates all of these fancy deliverables and color schemes that make things look really cool. But at the end of the day, as we plan a lot of this stuff out, I'm still of the opinion that nothing beats a pen and paper and a blank 1040. In English, right? Just taking your prior year's return and creating a mock return for 2025 and saying, what are the similarities or the differences and how much room do we have? But I think that's how we bridge the education gap at VestGen really well. Is it's not just a computer program giving you a number and then no one can explain how they got to the number. I think sometimes with taxes, because it's not something that someone deals with on a daily basis, we've got to be able to break that down either on the whiteboard or using a basic tax return and go through those lines that are most important and show people, hey, if you choose to do this, this is great, but here's the opposite reaction, right? For every action, there's an opposite. So you might qualify for this deduction, but we might give up this, or you might want to do a Roth conversion, but it might cost you this. The only way to figure out what's best for you is to write those several scenarios down on paper, and then you and your spouse or your partner make that decision. Just because your neighbor or your colleague at work does it doesn't mean that's best for your family. This is an individualized process, and we have to be able to kind of mix that technology, which is fantastic, with just old school pen and paper and be able to write it out to really drive home the efficiencies that can be created when you combine investment planning with tax strategy. And that's what you do a really great job of at VestGen.
David, thank you. So let us help you start creating defined outcomes for your income taxes, which will allow you to create leverage and enhance savings so you too can thrive, not just survive in retirement. Connect with us online, getretiredstayretired.com. That's getretiredstayretired.com. Subscribe to our newsletter. Download some of our great publications like the One Big Beautiful Bill Act and what it means as an opportunity for investors, and take advantage of the complimentary consultation. You're listening to Craig and David in the Know, VestGen Wealth Partners, AM 560, The Answer.
Would you like a dose of knowledge? Good, because Craig is back and about to fill your retirement prescription. Back to In the Know Radio on AM 560. The Answer.
Hey, because we help people get retired and stay retired, that's not just a planning thing. It's not just a cash flow thing. It's not just a tax thing. Oh my, it's an investment thing. So we got to talk about, is peak uncertainty behind us? What are the higher hurdles that might be ahead? And it's the unknown. Remember, the unknown that often matters the most. And what about the forecast trap? Yep, is there such a thing? Oh, I think it exists. So David, break it down. Let's go back and forth here. Talk to us about this concept of peak uncertainty behind us. I think I'm going to do it in a different way. David, is peak uncertainty behind us?
Well, if the culprit was tariffs and the culprit was corporate boardrooms who have supply chains overseas scrambling to figure out what they were going to do in a very short window, I think that is behind us. It seems like the market is now brushing that off to the side and probably focusing on other things. But I think, during that time period of March and April, as multinationals were probably trying to buy as much inventory as they could, figuring out how to rewire their supply chains, it doesn't surprise me that like what we call the fear gauge in our business, the VIX, had spiked, I think, just above 60. Now, 60 is just a number. To put that in perspective, though, I think that's only happened 3 other times in the past 20 years. So that was a major event that people did not forecast correctly. But I think most of that, as we sit here today in the middle of August, I think most of the fears have been quelled just a bit.
David, I think that's well said. So let's go ahead and be definitive. Peak uncertainty, it is behind us. Peak uncertainty happened in April. We all saw it as a part of the Rose Garden Speak Liberation Day and the strategies. And yes, that's what I'm referring to them. Their strategies on the negotiation for trade. But what matters to all of us as an investor, what really matters is the forecast, right? Because markets care about the future. You want to secure your future, you need to secure your money. So I think the question is, what does the future hold? David, some people like to say that it's impossible to say. You know what? That's just a throwaway. That's a takeaway. But David, I think one thing is obvious. When U.S. stocks rally some 30% in just 3 months, isn't it safe to assume the pendulum might have swung completely from pessimism to unbridled optimism?
I think for certain investors, that's certainly the case. I mean, we've come a long way in a short amount of time. This is why you hear people say new highs make new highs. And when stocks are appreciating, usually what that means is the backdrop is not perfect, but the backdrop is getting better. And that's something that we always try to drive home to investors is markets don't move all the time off good or bad news, and that just absolute form. The markets move off, are things getting better or worse? And I think what we experienced in the spring were things got really, really bad. And then as the negotiations started, things started to get marginally better. And that was all it took for the market to get this quick reversal. Now, I guess the question is, did things swing way too far to the other side and there's maybe too much optimism? You hear some of that rhetoric on TV. What do you think about it?
Well, and I think that gets into kind of our third talking point is it's the unknowns that often matter the most. I mean, David, everybody knows now, it's been revealed what the risks are, right? I mean, was a trade war going to create a recession? No, it hasn't. Is inflation going to cause the Fed to hike rates? No, they're going to cut in September. I'm making that call. Is there going to be some credit-driven event like when the bond vigilantes came out in April and broke the bond market, the treasury market in the U.S.? No, that's done. And what about the U.S. dollar crash? No, the U.S. dollar is not crashing. The U.S. dollar is not debasing. The U.S. dollar has just given back some of its exceptionalism, unfortunately, that we achieved over the last couple of years. So I think, David, when you ask about the future, it's the unknowns that often matter the most. And an example of one of those unknowns is AI, artificial intelligence. This is a shift. It's a narrative that could have an outsized impact, a massive outsized impact. And I think it's that unknown that really matters the most, because that's what could really change the entire view on the market. And David, my own belief, and I think you share it, we've talked about it on the radio, I think artificial intelligence is transforming society in ways that no one appreciates it because you don't even see it yet. But I think by the time you come out of hibernation, everyone comes out of hibernation come 2027, the world will already be radically different than it is. And I think that's one of the reasons that maybe in our next segment, David, we have to talk about real return investing in a world that's about to be transformed in the same way the Industrial Revolution transformed the world generations ago. I think that's where we sit. And what should people be doing to future-proof their investments if that's the type of transformative change we're going to have? See, there's been revolutionary changes in technology, the PC. There was revolutionary changes relative to the internet. There was revolutionary changes with the energy renaissance. This isn't revolutionary. This could be completely transformative. David, what else do you think matters most when we talk about the unknowns?
Well, I think two things. One is I believe in the second quarter of this year, capital expenditure from the big tech companies on AI infrastructure actually exceeded like all of consumer spending combined, which was something that, quite frankly, caught me off guard because I'm still of the opinion that regardless of if people feel good or bad about the political environment, they're still going on vacation, they're still going to Europe, and they're still going out to eat. I think the other thing too that is a little bit comforting is the earnings numbers that have come through have been good. We're 85% through, I believe. I think earnings growth will come in at 9%. But I think more importantly than overall earnings growth coming in at 9%, it looks like market breadth is starting to spread out a little bit, meaning it might not just be 10 stocks that are pulling the whole thing higher. You're seeing a little bit better participation. And so I think that's if you're looking for a positive or a silver lining of why this market might not be done, that's definitely a data point that I would take some solace in understanding that it's not just a handful of stocks. Hopefully that concentration is spending out, because while the capital expenditures from a handful of companies are very large, you better believe that every Fortune 500 company is figuring out ways to implement AI to improve efficiencies across their business models.
Absolutely. I think all of that's underappreciated. And I think that leads us into a discussion of element number 4. David, you've often coined it the forecast trap. I think there's too many people who fall in love with their opinion. And we know that to be a great investor, to be a great steward of someone's capital, you can never fall in love with your own opinion. You need to consistently focus on data, because it's data, not sentiment. It's data that makes consistent, constant progress or reveals the truth. And David, when you talk about the forecast trap, what do you mean? And how do we make sure we avoid the forecast trap at VestGen to deliver the results that people need to get retired and stay retired?
Yeah, I mean, it's actually, we do an Outlook event for our clients. And one of my favorite charts that we display are all of the analysts' forecasts for the next 12 months. And we kind of throw it up there tongue in cheek, because when you look at the numbers, what you start to recognize is despite how smart a lot of these forecasters are, they're just forecast based off some type of model. And as what we saw this year, a lot of people were super excited coming into January and February based off this idea that we'd have deregulation and lower taxes, and the market moves up. And a lot of analysts had price targets showing markets going up 8 to 10%. Well, it only took 30 to 45 days for all of those analysts to then lower all of their price targets. And then another 45 days later, they raised them right back up again. So I think the issue is these models, these forecasts, well, they don't account for COVID. They don't account for $7 trillion being pumped in the economy. And what we do at VestGen is we don't forecast. We just let the data speak for itself. And we'll talk about after the break some of the data points that we look at now and we're really paying attention to as we calibrate for the second half of 2025.
So let's get calibrated. There's only 5 months left to make excellent investment decisions. We're here to help. Get retired, stayretired.com. That's getretired, stayretired.com. More to come. Craig and David in the know, VestGen Wealth Partners.
It's more In the Know Radio with Craig Bolanos on AM 560 The Answer, where his goal is to pummel you with financial know-how until you say uncle.
David, we just got done talking about 4 critical concepts that are trending today when it comes to investing. But David, can you share with us and spread some light on what people need to be thinking about, what people need to be paying attention to when it comes to this high frequency data and the low frequency data? I'm talking about sentiment versus hard data, and how we're making the divide at VestGen Wealth Partners to make great decisions on behalf of the clients and families we serve.
I think it's been a similar story for the last 3 years, right? So one example I would point to is this tug of war between sentiment and jobs and the actual jobless claims. Meaning when you see surveys, generally speaking, people feel pretty poorly about the jobs market. But then when we look at the actual jobs numbers after the last couple of years, we know that the actual job numbers are pretty good. And that's part of the reason that this market is held together is we've been below trend line with the unemployment rate. Now, as we talked about the other week, we got a blip on the radar and it caught a lot of people off guard. We had some major revisions to those jobs numbers. So I think that's definitely a cautionary sign. But if you said at VestGen, does that mean that we're tweaking things immediately? No, we want to see if this is just a blip on the radar or if we're going to get another one or two reports that suggest the trend line is actually changing. But I still think this is, I don't want to use Goldilocks, but this is an economy where it's not perfect, but the soft data is definitely not the hard data. And the hard data is the data that we can actually track. That's good enough to keep us going. But here would be my advice for people. It's gotten us to new all-time highs in the market. And I think as you recalibrate for the second half of 2025, what people should be thinking about is what kinds of rotation should they be doing in their portfolios now to take advantage of some of the mismatch opportunities? Because there's lots of stocks that have outperformed this year, but there's also lots of great companies that are putting up a negative number for the year. And if you're a long-term investor, what's wrong with taking some paper profits, turning them into real profits, and going ahead and planting some seeds and some investments that may have underperformed in the short term, but are poised to maybe outperform over several years moving forward? That's what I think people should be taking a look at.
And David, that's just called rebalancing, because rebalancing, the enemy of rebalancing is complacency. Complacency is a base concept of recency bias, continuing to expect that what worked recently is going to work in the future. Do not get caught with recency bias. Again, that's where you think the investments that are working today are going to be the ones that work to tomorrow. Pay attention to what David just mentioned. Price matters, price matters, price matters. Valuations matter. So if you want to seek safety with capital appreciation, then you need to be doing asset rotation in the last 5 months of the year to get additional dollars into those places that are fairly priced in the market while giving yourself agency, license, permission to harvest paper profits that you have elsewhere. And a big part of this discussion is also all throughout today. We talked about taxes. We talked about the fears that people have in these retirement surveys. We acknowledge the age wave demographics of more than 11,200 people per day hitting 65 in America. You got a future proof for taxes, future proof for inflation. I also think you got to start future proofing on currency. What do I mean by that? The world is changing. If you're not paying attention to it, you should. The US dollar remains the world's reserve currency, but we have to accept that other countries are starting to desire to no longer be so dollar denominated. If people say, why has gold risen so far this year? It's certainly not a risk off asset because the stock market's doing right. It's happening because other countries aren't buying as many US treasuries as they used to. Other countries are storing their money in hard assets like gold. If someone says, why is Bitcoin doing so well? Why are some digital currencies doing so well? It's because there's a changing narrative. You've got countries, you've got states, you've got institutions who are viewing digital currency as a potential storage of value. Also, I think you have to look at the fact that institutions all around this globe are competing for something that is a resource that is scarce. And the resource that is scarce is real estate, real estate, real estate. Everyone continues to wonder why housing continues to grow in cost, because the purchasers of housing, the purchasers of real estate are not just John and Jane Smith down the street. It's institutions. So I argue that a big part of your investment portfolio going forward should be future proofing by investing in things that are going to provide you a real rate of return. So you should consider currency. You can consider storages of value. You should consider real estate. You absolutely should consider infrastructure. We've talked about that time and time again, right, David? Talk about how VestGen Wealth Partners has an institutional open architecture platform to allow clients to outgrow just mutual funds and ETFs that their advisors are limited to.
Yeah, I think this is what I call leveling up your investments. There's nothing wrong with owning publicly traded infrastructure stocks. I own those in my personal portfolio, as do many of our clients. But some of this infrastructure is not publicly traded. And the way I think about it is we got to move to where the money is going. There is a massive infrastructure spend coming throughout the world, and the governments don't have enough money to do it. So it's going to be private companies to step up to fill that void. And one of the voids they need to fill is they've got to figure out how to power all this AI we talked about in the previous couple segments. And if you want to be a part of that, and you understand that it's not going to be all done by publicly traded companies or government entities, your way into that is to get into this energy infrastructure, fiber optic infrastructure investments, which are long-term inflation hedges for your portfolio. They are rent takers, but they are the real assets. And I think that's the key. We want the real assets because when the market goes down, the way the market works today is everything goes down at the same time. There's really no safe place to hide because we have so many algorithm trading programs. So we need something that offers the potential to zig when other stuff zags. I mean, you mentioned, a weaker dollar. I think a 12% decline since January 25th. It's the same thing. This is why people are shifting dollars outside of the United States. Markets experience mean reversion. We go through cycles, and we are still at the beginning, I think, of a lot of these new cycles and trends emerging. So we're not here to tell you to upend your entire portfolio. But if you think the exact same investment strategies that worked the last 5 years are the only way to invest moving forward, I'll take the opposite side of that trade because I think now is the best time with the market trading at all-time highs to get a second opinion, level up your investments. You don't have to make a change, but I think you deserve to know what's available. And firms like ours, large IRAs that are managing billions and billions of dollars, those are the ones that provide access to these other strategies. It's not available with your run-of-the-mill financial advisor that might have 100 clients and a low assets under management. These are the investments that you, as a successful retiree, need to take a look at to see if they're going to put your family in a position to be successful.
So let us help you level up your investments in the 5 months that remain of 2025. Markets are at all-time highs. Valuations are getting stretched. What can you do to future-proof yourself, your retirement with investments that are specifically curated to you? And if Donald Trump thinks that alternative investments belong in corporate retirement plans that's trending in the news, then I think you deserve to have them in your IRAs and your trust accounts, but do them with an institutional flair that you won't find elsewhere. That means you need access, and VestGen Wealth Partners is your gateway to that access. Connect with us online at getretiredstayretired.com. That's getretiredstayretired.com, 833-964-PLAN, 833-964-PLAN. And when you call or take advantage of that complimentary consultation, tell us that you're ready to level up your investments in the remainder of 2025, and we'll get you the information that you need to participate in those markets. More to come. Craig and David in the know, AM 560.
Okay, Windy City, get ready to be blown away with a hefty gust of financial know-how. You're listening to In the Know Radio with Craig Bolanos on AM 560. The Answer.
Hey, maybe you got out of church later. Maybe the line at Costco or the Home Depot was around the corner and you missed some of the sincere and actionable ideas that you needed from today. Well, connect with us online at getretiredstayretired.com. We talked about the triple threat, the triple whammy that this new retirement survey went ahead and mentioned of inflation, healthcare, and will Social Security be there in its current form for you, for your retirement? See what we said by connecting with us online, because we've got solutions that you can use to cure all three. In addition to that, we spent a lot of time focusing on taxation once again. What are all the things you need to know in the One Big Beautiful Bill Act to make sure that you are engineering your investment program, your retiree withdrawal strategy to qualify for the SALT cap deduction, qualify for the enhanced $6,000 senior deduction, to possibly qualify for 0% capital gains, 0% qualified dividend income tax. And we did all of that in a wrapper that David, one of our lead wealth advisors, talked about during segment number 2. In addition to that, we got done talking about the analyst trap, talking about future risk, talking about all things investment. And that's just my reminder that if you listen to us, you need to work with an advisory firm that has an institutional background in markets. You can't afford to work with sales professionals, but you need to work with a firm that has a disciplined, systematic, repeatable process with an institutional desk. And that desk can give you access to what we just got done talking about, some real return investing. There's a reason that precious metals have changed the landscape year to date. There's a reason there's a movement into a global position after 2 quarters of back-to-back returns in EFI and emerging markets. There's a reason that infrastructure and energy and communication and data centers deserves a look inside of your portfolio, because it's about future-proofing. It's not just about publicly traded, diversified stock and bond portfolios. You need to have the right mix of alternatives, but they need to be done the best way, the pure way, the original way. And that is a gateway through which a firm like VestGen Wealth Partners operates and can provide you. So we offer you the chance to do better. David calls it leveling up. Let's level up your game. Let's level up your wealth plan. Let's give you the opportunity to work with a family office experience where your investments, your financial planning, your cash flow modeling, your retiree healthcare, your taxes, and your estate are all under one roof with multidisciplined professionals that always put you, the client's interest first. Connect with us online, getretiredstayretired.com. That's getretiredstayretired.com.